Can you hear us?
Yes, I can. Can you hear me?
Yeah, perfect. Mazzala is here. We could start. Could you sit on the left over there with some? Kibuki, can you sit also on this side? So if you move, because we have one side. That's all. Don't forget your free pen. We have
Pen?
we have free pens today.
Oh, not pizza?
I'm waiting for the bagels. I don't know. Maybe I didn't pay them. That's a problem. We feed them now, and then we give them free stuff.
Good. So they come for the food.
And yeah, mostly, as you can see. Kabuki, I will make sure I see you. I can hear you too. So, guy over here. All right. Start this thing. All right. So I have Mark McCauley. Mark, you graduated in 2000 and...
So 6 from undergrad. I went undergrad, and then 7 from master's.
Okay, so this is going to be interesting because he graduated almost in 12 years next to Kabuki. I mean, 2007. So now you're going to see someone that has a lot more breadth in his career, and you can see what ends up happening after a while. So maybe, Mark, as we discussed, maybe you could start by telling us how you got the original job out of Lehigh when you graduated from this program, and then we get to see where you are now. Thanks.
Sure. And I'll walk you through a little bit of decision-making too back then. Although I'm much better at decision-making today than I was then. So, yeah, thanks for coming to hear me speak here, and appreciate the invite to the class, Professor Zorro. So I went to Lehigh undergrad. I'm not sure how many of you went, but I studied math and bioengineering there. And the reason I actually went and did master's was partially because Professor Dobrik, who I'm not sure was still a professor there in math, who was teaching the courses that I really enjoyed, as well as wanting to explore the opportunity within Wall Street after deciding I didn't want to go to med school. And so that seemed like a path to take math and then transfer that knowledge into financial engineering, and then transfer maybe into the business world. And in doing so, I first got an internship actually during my master's time at a options trading platform in New York called Group 1. And I had a friend that graduated and went to work there and knew they were hiring. And what they did was basically do proprietary options trading on the equity exchange, the American Stock Exchange. They were market makers, and they also had kind of quantitative algorithms to try to make profit off of volatility. And they actually created the VIX options. So I did that for a summer, but it was a pretty focused, smaller platform, maybe 100 people worldwide at the organization. And I thought the best way to get a real understanding of the financial markets and world was to go to a much bigger place with more breadth in the asset classes they covered, and more connectivity to like the world financial market. So the place that you naturally think of is investment banks, right? Who cover everything from equities and investment banking on the private side, as well to fixed income, currencies, and commodities trading. So there's sort of everything under the umbrella there. And where I ended up joining was UBS. The process I took to get there was just hustling. And that was...
What? I'm sorry, what did you say?
Hustling. So use every sort of resource I think possible, and don't be afraid to ask for help, because everybody who's in my situation is, beyond my situation, running businesses. Everyone sat in your shoes with very little, you'll be able to add value shortly after starting, but the beginning part of your career is absorbing knowledge before you're really able to contribute significantly and try to figure out what you want to do long term. And everyone's been in that same place Everyone's been uncertain about what they want to do and has had mentors along the way to provide them advice. So I leveraged that through my Lehigh network. I leveraged it through my personal network, and I had interviews at different shops through the different networks. Where I ended up winding up was UBS because they had a rotational program in fixed income currencies and commodities at that point. So they separated the investment bank on the sales and trading side between equities and essentially everything else. My connection to UBS was actually through a family friend who went to business school with some people that worked there. Made an intro to me. UBS at the time was growing really rapidly, had made some acquisitions, was expanding. This was 2007, and they had a really good training program that was considered top-notch on Wall Street. So I joined. I finished in 07, actually in December 07. I ended up getting another degree in math and doing the master's over the course of 3 semesters. I finished undergrad, and I joined with sort of master's and MBA students in April 2008, which was right before, as I'm sure you know, the financial crisis. Really, the bottom was kind of through Q3 2008 into Q1 2009, and in March 2009 was a low point in the S&P 500 before things rebound. So quickly, this rotational program that I thought I was signing up for went by the wayside, and you had the investment bank trying to survive. It had to get rescued actually by the Swiss National Bank a little bit, and there was probably, I don't know, I feel like 5% of the workforce getting laid off every couple of weeks. So I saw people walking out the doors, layoffs, just a very difficult time to be in the business, but also reflecting back on it now, a great time to learn, especially for me, someone who ended up probably taking on much more responsibility than I would have had if it was a normal, market where you would have been layered in the hierarchy of senior people. All of a sudden, there were less senior people because they were expensive, and what was left was less people, but just as much stuff to take care of. In fact, even more. So instead of rotating, the place where the bank was put all their assets that were structured and toxic at the time was within the structured credit desk and the repositioning group. So that was the mortgage stuff, synthetic CDOs, some really exotic credit products, a lot of which don't exist anymore today, or at least not to the volume they did then. So at that point in time, it was about survival and using my quantitative abilities to help add value to the bank by figuring out how to reduce these risks that were hemorrhaging the balance sheet. So I'll stop there for a second before I get on to the next sort of stage of my career, and that's the beginning of my career. I was within that group in structured credit, dealing with a lot of the legacy issues from April 2008 through 2011.
Okay. So basically, you use the word hustling, and then of course you happen to be in 2008, which is the worst time really to look for jobs. But
Yes.
thanks to your skills, you were able to survive the onslaught. So then, what happens? What kind of job did you get after that, and how did you move from one place to the other? I mean, I want to emphasize the networking aspects because these guys are going to graduate in a couple of months from now, and I want to instill in them the idea that you can't just look for jobs for the open ads, right, on LinkedIn. You gotta create face-to-face contact with people. The people are going to be doing the hiring.
Yeah. So at that point in time, we were coming out of the crisis and the bank was growing again. And I was doing I moved from dealing with the legacy issues within the bank to actually working with a new group within structured credit that was providing solutions to insurance companies on regulatory capital trades. Very simply, we were writing very out of the money reinsurance risk on pools of liabilities and assets with insurance companies. And I enjoyed that because it was more than just dealing with like pure quantitative and analytical numbers. I was coupling, those skills with understanding an operating business and marrying the two, that and coming up with a solution for the business. So as I thought about that, I saw a new career path. I think you need to be open as you go through your career. You need to be open-minded about what you're drawn to and where your skills are best suited. And I saw myself as, yes, I have quantitative capabilities, but I worked with quants who were much better than I was, just on programming the numbers. Where I thrived was having the skill set there, but also dealing with the legal documents, negotiating, and problem solving, leveraging resources and different people, from lawyers to quants to structuring people. So now I saw a new sort of career path and want to pivot to do something where I was working with businesses and coming up with actually more investment banking, but on a quantitative side, on capital solutions for companies. So a group within UBS, so I start to look externally. I start to network with other people that I knew that I gained within Wall Street. So when you're within Wall Street, you're talking with other banks, you're talking with asset managers, and it's good to go out, you grab drinks, you grab dinner, like maybe do morning workout classes. It's now a popular thing. But you don't just want to have your network within the bank, you want your network outside of the bank as well. A lot of job offers I've gotten over my time has come from people I worked with at UBS who then left, went to another firm, was doing something interesting, they were growing, they were expanding, they thought I would be a fit, and then they wanted to bring me in an interview. At the time, I realized it was going to be tough for me to make a big drastic change externally and be easier to make a change internally at UBS, where I had developed some brand value. People knew me. People knew I was, achieving well within my group. People trusted me, thought I was accountable. So a new group within UBS was actually formed in 2010, 11. Did these types of solutions called the Special Situations Group at UBS. So I saw that as an opportunity to leverage the skills I had within this group to apply for a job within this new group at UBS. I thought that would be easier than an external move, and I'd be able to do something slightly different that would expand my skill set and open more doors. I think that at that point in time in my career was the most important thing, because I hadn't found yet determined, like, yes, this is definitely what I want to do for the rest of my life, and this is the path. I was still trying to learn more, expand values, and open more doors. So I think early in your career, you want to open as many doors as possible so you have more choices. The more choices you have, the better decision you're likely to make down the road, as long as you analyze them properly. More choices are better.
So basically, you because there's three paths right now that they have. They have the hedge funds path, the risk management path, and the data path, more and more. So you were more on the risk management, dealing with insurance companies, and right when you started, that was kind of your path.
Yeah, it was risk management with insurance companies and reinsurance. It was dealing with big data, which obviously overlaps with risk management, and that was also with structured credit. And then I pivoted to do more of I define what I ended up doing as more private, specialized credit, but directly for companies. So I started financing companies, which was more an investment banking path after that. And that was a little bit different because the people I worked with had taken a different path to get there. They had worked in traditional corporate investment banking and gotten MBAs and then went and joined this group, whereas I came from a data risk management, quantitative background, and moved into this group that was more than company facing.
Any questions on your side? So we don't take too much of this time. Any questions? Come on.
Oh, wait.
Yeah.
Ramos has a question.
So my question is, since we heard about your like 3 different career paths, and then so even though they're kind of different but also similar, so when you have those transitions, do you have to go through a certain training to try to like acquire some certain skills, or everything that you got come out from the MFE?
Yeah, absolutely. I think they were all, the decision I had to make at that time was, do I continue in my group where I'd gained seniority and actually was getting responsibilities to take over and run new businesses, or do I take a step back and think long-term about gaining another skill set and also kind of going down a path that I think is a better fit for me, career-wise, and something I'd be more passionate about. So it was a step back, but I was happy to do that. And I was happy to kind of expand my skill set, which I think has opened a lot more doors down the road, rather than being short-term focused on just climbing directly up the ladder and maybe getting paid more on a term basis, which is something that will factor into decision making at some point in time. But I think it's not what you should be focused on for certainly the first like 5 to 10 years of your career. It should be about figuring out what you want to do, where you think your skills are a fit, what skills you need to develop to get to where you want to go, and keep in mind you want to have many options, because you don't exactly know what path your career might take and what might be appealing down the road. And the more options you keep yourself open to, the better off you'll be able to make those decisions, rather than being sort of narrowed into one specific place. Now, the nice thing about where you guys are coming from is everyone cares about analyzing big data. Whether you're talking like private equity shops, venture capital, risk management, hedge funds, or just dealing, or fintech, obviously, which is kind of changing the way we do consumer lending and the way we do settlement trading within investment banks, and how they're actually processed, and is kind of removing a lot of the manual jobs as existed before. So like you have a foundation that right now provides you a breadth of opportunities. And I think that's a really great place to start out from. And you should be focusing on going to places you're going to continue to learn things that continue to give you a breadth of opportunities for a while, before you start to narrow down as you figure out where you want to be, what your passion is, and where you think you excel.
Yeah.
Yeah. Can you hear me?
Yeah, speak up a little bit.
So my question was, you mentioned that in your career at one point you had a project, I think it was in insurance, where you enjoyed that because you moved away from the quantitative background and you had to do a bit more operation stuff, a bit more business analytics stuff. So my question is, for somebody who comes purely from that side of the fence, from the analysis part, the research part, and if they want to meet the quant department halfway, what skills are important for them to develop? Whether it might be a program, or it might be a language, or it might be something else completely. What skills should they develop to sort of come to the middle between being purely quant and purely like research?
So I didn't catch all of that. It sounded like you asked about the insurance part, and then what skills I'd need for research as well as quantitative. Hey, Professor Zorro, could you?
Yeah, I mean, you're basically saying that when you started, you were using your quant skills,
Yes.
but you got involved into something else, which is insurance. And I don't think you got, you weren't trained with insurance where you started. So you had to pick up the skills very quickly.
So yes, I had to learn about insurance, but it was very quantitative. I won't go into, I'll give you a quick overview of what it was. And the structured trade desk was kind of the desk that was able to use and figure out ways to use quantitative skills to come up with solutions, and then we'd leverage individual expertise everywhere. Like all the teams I worked on were truly teams that were across groups within an investment bank. So it wasn't as if any one person had to have all the skills. Different people had different skills that they brought to the table to kind of figure out a problem and solve it. In the insurance thing, what we were specifically doing was very quantitative. So we would get big data files of lots of insurance policies. And these were mostly life insurance policies. And so we were doing actuarial science in a way. So we get inputs on what someone's age was, smoking, non-smoking, different sort of metrics to figure out what their probability of actually mortality was. And this is what insurance companies do, right? They, if you want to go take out a 30-year life insurance, they're going to have you go into a doctor's office. They're going to get lots of data. They're going to figure out how much you need to pay per month based on what they think the probability is that you might pay next year, year 2, year 3, year 4, and every year, in which case they'd have to pay you a big sum of money. That's a liability, and they have income coming in. Now, states make you put up a bunch of assets against those liabilities to make sure insurance policyholders are always protected before other creditors of the insurance company. So we essentially then used all that data to understand the assets, which were investment grade bonds, and the insurance policies, which are liabilities, and wrote an insurance policy for the tail risk of that, which ended up releasing capital to the insurance company to do something. So that, just to give you an idea of I didn't know anything in insurance, but I knew guys that knew insurance within the team, and they needed someone to help deal with the big data and quantitative stuff. And so with taking that skill set, I was able to then learn insurance from them. And that's really how I operated within that group. And then even how I operated within the special situations group, where they were starting to do sort of fintech lending. So they understood different things. I understood different things. We pieced those together. We learned from each other. And with our different skill sets, we were able to come up with solutions. I think that's really important in the work environment, and how people are going to judge you in interviewing is being able to work as groups to solve problems, because none of these complex stuff is ever solved by 1 or 2 people. It's usually a network of people, as well as third-party advisors that we bring into stuff. And even I don't know if anyone's had this experience here, but at UBS, when I did my interviews, I think where I differentiate myself, and I would give advice to you guys to think about if you get put in this situation, was they gave a group project to about 5 of us that were all interviewing for the same job. And they gave us a background, let us sit there and take notes and think about for 10, 15 minutes, and said, okay, convene together and we're going to observe you while you work on a project. And what they were really looking for, which I've come to realize later on, I think what I did was being a good listener and team player. So you don't want to just be the alpha and the leader dominating the conversation, but being able to leverage resources and use other people's skill sets is extremely valuable. And so that gives you a sample of learning on the job from people you're working with that have a different skill set, and how you'll weave your way in with your skills to help add value, and in the meantime be gaining knowledge from someone else with different expertise.
So in the time that we've left, can you tell us a bit what the Parque Capital, what you used to do? Parque Capital?
Yeah, Parque Capital. So I'm still there. So I'll just get real quick to the rest of my career. After UBS, that group that we formed within UBS spun out to form a new company, Melody, which was doing the same sort of investing, which was providing capital to businesses that were going through transition periods. And someone I worked with at UBS, again with networking, ended up raising capital for a new fund called Parque Capital, where they wanted to bring me on as a partner, which was investing in companies going through transitional times. So sometimes that's bankruptcy, sometimes that's M&A, different corporate actions. They brought me on, they asked me to join and help them raise money and start a fund in Boston, which is where I am now. That fund's been operating for 4 years. I've enjoyed it and learned a lot from it, and the returns have been good, but we haven't grown capital. And so for this was the first time I sort of took a real entrepreneurial route and learned how to try to run a business rather than just investing. And that was, something that I think is coming from at Wall Street or anywhere else is a very different skill set. So Parquet Capital uses technology to try to identify mispricing in assets across bonds, term loans, and stocks. So usually it'll be catalyst driven. So we have different measures to quantify fundamental value of these businesses. And then because of a short-term event, there'll be a dislocation and we try to take advantage of it. That's Parquet Capital. That's where I am today, but where I'm actually transitioning out and speaking with a few other funds right now about joining, because Parquet in itself has not expanded to the extent I thought it would be at this time. And so I'm now back in the position where I'm using my prior network I've gained to leverage that into new opportunities at funds, more so in private markets than in public markets.
All right, hi, how are you doing? My name is Matsela. I'm an international student here. I've got a quick question. What's been the highlight of your career, just out of interest? Because I see that you've transitioned through various roles. Which one would you say has been the highlight in terms of the role you were doing, and what skill set has actually helped you weather the storms? Because from what I'm gathering, you've been able to thoroughly network, and I assume as well that your technical skill set is way above average. I'm just trying to get a feel of what's been able to get you throughout the entire timeline, I would say, progress of your career.
Yeah, I think everyone I've worked with, I've kept a tight network with, which has kept a lot of doors open, and people have been willing to give me new opportunities to do new things because I've proven myself to be successful in the past at doing that, and they think highly of me. So they think if they can give me a new business or a new task or a new focus, you can ramp up pretty quickly on it. And the highlight of my career, I would say some of the most enjoyable times of my career thus far, and this has part to do with the market dynamics too. It's not just the job specifically, but in the time period from kind of 2011 to 2013, which was out of the financial crisis, but there was this big shift in the world from banks used to provide a lot of the financing to middle market companies and different businesses that they no longer do because regulations changed. And there's been this huge growth in private markets. But we were really at the forefront of that before it became very saturated. At that point in time, I was working on some really interesting financings for some different businesses where I got to work hands-on with management companies and private equity sponsors to rescue companies that are going through difficult times and need kind of rescue financing. And so to be able to rescue these businesses and analyze them in a different way that other people weren't able to, and to provide a solution and kind of see value where other people weren't, and help grow businesses. So like at the end of the day, even though I wasn't running the business, we were working with management to help them achieve their end goals. And that, I think there's a lot of parallels in that to this, or whether you're doing more data-driven quantitative stuff, giving people the tools to be successful. You know, I was giving people the right capital to be successful and to run a successful company. And I think with data management and analysis, if you give the right data, you can help people make the right decisions for businesses. And that was quite fulfilling and interesting at the time.
Just a follow-up question. Last one.
Yeah.
In your opinion, well, you have experience in the workplace. I know there's a lot of ramp up of data, alternative data and all of that. Is it really driving the bottom line in businesses in reality, as like in business as you are working right now? Like, is it really?
So data's always been part of the business of any business, I think, right? But it can't be only data, because data is mostly backward looking, right? So there's doing that and understanding and trying to project things forward. So I think you start with data, and there's a lot more that goes into it than just data. I mean, in some businesses, you're going to be focused on regulations and regulatory, right? And how that impacts stuff. And that has a lot to do with risk management systems, right? As regulations change for how much capital you have to hold against within investment banks, certain positions that impacts profitability of businesses that are in the business of lending. So I think you always start with data, and then you have to go above and beyond that and be creative with the data to actually be successful with it, if that helps. But data's just expanded. It's always been there and we've always used it. It's just become more and more important as we've gotten more of it and people have gotten smarter about how to use it.
Thank you.
Great. So Mark, I want to thank you for your time. I don't want to take too much of your time. Do you mind if I share your, on LinkedIn, some of the students that are graduating, maybe they could forward their resume to you, or maybe you could send them some links to help them out in their process, maybe a couple of students. And if you don't mind sending me your address, because we send gifts to the people like you that give their time.
Sure, happy to.
And then I'll send you something.
Yeah, and if there's any follow-up questions, feel free to.
Yeah, there was an opportunity in that LinkedIn. Thank you very much.
Thank you.
Okay.
Okay, good luck. Bye.